is the second. First it was gold, now it's silver, but you're going to see it. There's going to be a crisis in the bond market. U.S. Treasury bonds are going to collapse. The dollar is going to collapse. Gold is telling you that. The problem is most people are not heeding the warning. So who is that who tried to speak? Go ahead.
Oh, hi, Peter. Thanks for having me on. My question was actually directly related to what you were just saying. In the situation where the dollar does collapse and fiat currency collapses, how likely is a hyperinflation situation, and what are you doing outside of preparing with silver and gold? Are you preparing in other ways that aren't monetary?
Well, I mean, my main preparation is I own a lot of these inflation hedge assets. And I not only just own a lot of physical gold and silver, and in proportion to my net worth, I don't have that much in physical gold and silver. I mean, compared to the average person, yeah, I got a bunch. And I got plenty as far as to use for barter. But most of my money that I control or have, is in assets, physical assets like gold and silver mining companies, like, industrial metal companies, energy companies, electrical companies, consumer companies that make consumer goods. I have pharmaceutical investments. I mean, just companies that make, tobacco and alcohol and just regular food and beverages all around the world. I have money in emerging markets. Then I've got some money in real estate. I own real things. What I don't have any money in, I have no money in U.S. bonds. I don't own any government bonds. I don't own any municipal bonds. I don't own any corporate bonds. Nothing. Right? I don't have any bonds. So as far as like a 60-40 portfolio, my 40% bonds is 0% bonds. Right? I don't have bonds. I think it's just a losing deal. But I also have very little in U.S. stocks. I have some U.S. stocks. I don't have no U.S. stocks, but I have some. But the vast majority of my stock portfolio is outside the U.S. As a hedge against the calamity that I see coming as the dollar falls apart, as the U.S. loses its reserve currency status. I understand what that means because our whole economy is riding on that. That's why I said Trump was playing with fire with what he was doing. Right? He wasn't just biting the hand that feeds you. He was biting off the hand that feeds us, and just not really appreciating where we are. And again, I did this debate, with this guy at Zero Hedge a couple days ago, about the trade deficits and all that. And yeah, I mean, I know these deficits are a problem, but they're really the result of a problem that goes much deeper than the deficits themselves. It is what's causing them. I've been critical of the conditions that have led to these trade deficits for 20 years, right? I wrote about it extensively in my first book, Crash Proof, that I wrote in 2006, 2007, or 2006. No, I wrote it in 2005 and 6. It came out in 2007. But I was very critical of the policies that were producing these trade deficits. And what we need to do is address the root cause of the deficits. We can't just put tariffs on and think that's going to solve the problem. It's actually going to make the problem worse. That's what I was trying to explain. That tariffs are like putting a Band-Aid on skin cancer. Just because you can't see it doesn't mean it's not getting worse. We need to go to the cause of the cancer, and that's the government and the monetary, the fiscal policy, and the regulatory policy that, by and large, are being left alone. We're not getting to that. We're just trying to throw tariffs on and blame our trading partners for our own problems that have resulted in these deficits that we rely on like a crutch. And Donald Trump is like, well, we don't need that crutch anymore. Fine, well, then we can't walk, right? We're going to topple over. And that's what's happening. And that's what I want people on these spaces to understand. Because, if you miss this, there's no resetting the clock here. If you're holding a bunch of dollars or cryptocurrency when the music stops, you're out of the game. So you got to understand what is happening and do something about it, right? The fact that you still have the opportunity to buy gold and silver. $4,100 is going to look cheap for gold. $52.30 is going to look cheap for silver. So just buy it now. Don't be mad when it was cheaper, right? Just be mad that if you're going to be even more mad if you don't buy it now when you look back at it in the future. And you can get it on these stocks. So you can go to my company, Shift Gold, and buy some gold and silver at Shift Gold. And you can buy some of these mining stocks. I love my fund, my mutual fund, Europe Pacific Gold Fund, EPGIX is the no-load symbol. And the reason, if you're looking at the track record year to date, the reason that my fund hasn't done as well as like GDX or GDXJ is we've got about a third of the fund in really small exploration companies that haven't really moved very much. But I believe that those stocks are going to be the rock stars of the next leg of this bull in these mining stocks. And good luck buying those stocks. I mean, try to buy them now. There's not a lot of liquidity. It took us years to build up this portfolio. So I think we're going to crush it in the long run because we have these small stocks. We have all the big stocks that have done really, really well. We just also have these small stocks that haven't done well yet. And I'm not talking about the type of stocks in the GDXJ, right? Because those are still big companies in the GDXJ. They're just not as big as most of the ones in the GDX, although there's a lot of stocks that are in both. But I'm talking about true juniors, exploration companies, small companies. These companies, I believe, are either going to get bought out in the next few years at many, many multiples of their current price, or they're just going to skyrocket on their own. But it's hard to know which ones to buy. That's why it's better to leave it up to us. Leave it up to Adrian Day, who's managing my gold fund, and just let him pick these stocks for you. Don't try to do it yourself. So my fund is Europe Pacific Gold Fund, EPGIX. That's the no-load symbol. You can buy it at any discount broker. Go ahead.
The problem for us in England is we can't get your ETFs here.
Yeah, you can't get my mutual fund. We're going to be launching next year probably an ETF share class of my fund. You'll be able to buy them anywhere in the world. But in the meantime, what you can do from a lot of countries is open up an account with us where we'll create an individual portfolio for you, a separately managed account, and we'll pick all those stocks and put it in there. So a lot of people outside the U.S. can still do that. But if you can, if you're in one of the countries we can't work with, then you just got to, buy the stocks yourselves until my ETFs are available.
Yeah, that's what I did. And thanks to you, I got following Adrian Day and Don Durrett and Andrew Sheckman. And honestly, man, you've changed my life. It's already being very noticeable in the portfolio. I just have one other question. How likely is it that you can see like a US government gold revaluation? And can you see that there could possibly be like a gold-backed treasury launch next year to coincide with the 250th anniversary of the States?
Well, first of all, a lot of the talk about a revaluation of gold is all a bunch of bullshit, because the idea is that by revaluing our gold, we somehow have a windfall that we could use, like it's some kind of get-out-of-jail-free card, like we're going to have all this extra money. Look, it's just an accounting fiction. It doesn't matter. Everybody knows that the gold isn't worth $42 an ounce. It's worth $4,100 an ounce. So even if we officially acknowledge that it's worth what everybody knows it's worth, nothing has changed. It doesn't give the government any money that it didn't have before. We have the same amount of gold. Now, people are like, well, if all of a sudden we have an extra $1 trillion, right, can't we spend it? Well, only if we sell our gold. But, that would be the dumbest thing we could do. All the other central banks are buying gold. Why the hell would we want to get rid of our gold now when the world is moving back to a gold standard? The other thing they think that we could do is, well, we could use it as collateral to print more money. Well, what good is that? That just means more inflation. If we just use the revalued gold to print more money, it's just another inflation tax. So there is no benefit to the revaluation of the gold, right? There's nothing that we can now tap into. There are some people in the Bitcoin community that think, well, let's revalue our gold and let's use that money to buy Bitcoin, right? That's like the Cynthia Lummis plan, is to revalue the gold and then buy Bitcoin. That'd be about the worst thing we could do. If we're going to create a bunch of inflation, why create inflation to buy Bitcoin? Then we have nothing to show for it. I know why the people who own Bitcoin would want the U.S. government to do something that stupid, but because they could sell their Bitcoin and cash out and make a lot of money. But the rest of the country would be left holding the bag. But I think that the U.S. does need to go back to a gold standard. But the politicians don't want to because then they give up their power. The reason that we left the gold standard isn't because gold standard didn't work. It was because it worked so well. It worked so well that it prevented the government from growing and expanding and running big deficits and printing too much money. But so we went off the gold standard so we could keep acting reckless and irresponsible. Had we stayed on it, we would have been forced to act responsibly. So eventually, though, the governments are going to have to do it because the markets are going to force it. Anybody else wants to chime in? Raise your hand, and I'll enable you. There's another guy that's there that can speak. Sweet somebody, little baby picture. He's still got. But if anybody else wants to, if they raise their hand, otherwise I'll just start enabling people. There's Greg, and who else? If somebody raises their hand, then I'll know for sure. Oh, here's the guy raising his hand. All right, so I'm adding Camper. Pat, who's that? And there's another guy with his hand up. Rationale. I just put you up. Okay. After I'll enable you guys to speak, you have to unmute yourselves.
Thank you for telling me that.
Go ahead.
Sure.
Rationale.
EPGFX investor from 2019, your previous high. How about that? So I sat here and suffered, and with your words have given me the confidence to hang in there.
Which fund are you talking about?
I'm sorry, I said the gold fund.
Yeah, remember, the gold fund, though, pretty much every year we've had the gold fund, we've paid large distributions, including this year. There's probably going to be about a 15 or 20% distribution at the end of the year. So you can't just look at the price of the gold fund and say, well, we're just back to the price, because we pay out so much in dividends.
Yes, and I've accumulated shares, so let me tell you the story, so and then ask you questions.
Yeah.
So I've been in there from the beginning. I suffered for 2-3 years, not a terribly long time, I guess, but I just want to thank you for giving me the confidence, because I was down 30% for most of that time, and now I'm up 75% from your previous high.
Yeah, well, it's not. I mean, it's not suffering. It's only like a mental suffering, because you're like, oh, look, I'm down, right? But I always told my clients that, look, if you don't sell, it doesn't really matter. If you don't need now, if you need the money.
Okay, we're listening to Peter Schiff. This is 4100 Announce.
I lost you. Hello? Hello?
Myself in gold stocks today than I would have had they just gone way up 5 years ago. Because I added to my positions quite a bit on the last big significant pullbacks. The most recent one I really added was at the end of last year on the big sell-off after Trump won. I was like, whoa, this is an opportunity I never expected to get. There was a big sell-off in some of these stocks, and I took advantage of that, and so did some of my clients. Unfortunately, I had other clients who got scared and sold. And I can't, be responsible for that, because I did whatever I could to discourage people from doing that. But
so can I ask you a question now going forward? So my moniker is Rational Man, which means I use reason and evidence, which is why I listen to you, because everything you say is proven true eventually. But when you think of a gold miner, a gold mining company, it seems like a terminal business. I mean, eventually they find all the gold they can, and they're kind of done. And if you're going to keep these things like forever, like a Warren Buffett idea, you do have to sell them at one point. Is that correct, or am I off base with that?
Well, you're not completely off base. So what happens is, gold companies, right? They earn a bunch of money, and they pay out some dividends, but they don't pay out 100% of their earnings in dividends. And then what they do with the money that they don't pay out is they invest in exploration and development so that they can replace the reserves that they mine. So if you're in the business of mining gold, you're going to try to find more deposits that you can mine. That's your business, right? You're going out there and trying to increase your reserves.
So
Now, a lot of companies end up doing that by buying out other companies. So let's say I'm a gold company and I've got plenty of cash because I'm producing gold and I'm making a ton of money right now because I'm pulling gold out of the ground at $1,500 and I'm selling it for $4,100. I take that money and I go and I buy a small company that doesn't have a lot of cash, but they have a big deposit that they've discovered, that they I go and I buy that, and now I add that to my reserves, and now I can develop that mine. So these are businesses, right? I think it's a good business to be in because I think the world is going to need a lot of gold because they're not going to need dollars anymore. Gold is going to be the reserve, but gold is also needed in industry, it's needed, in jewelry. The world still needs gold, and there's not going to be a lot of gold. So if you're in the business of exploring and mining gold,
well past your warrants, which I'm waiting for that explosion. You think you can keep it going beyond that, maybe some more, but then at some point you take some off the table. It's like I don't even know what to invest in 5 years because
look, obviously at some point we're going to pare back our gold stocks and we're going to put the chips, move them someplace else. I still think that we're early in the move. And the fact that so many people, like the mainstream media, they talk about, this is a mania. This is, I know it's not a mania. I'm in the gold business, right? I have a company, Shift Gold. I can tell you that sales are mediocre. They have not. My best year at Shift Gold was 2020 because during the COVID, when everybody was really worried, there was a lot of buying of gold and silver during COVID. So we're not even close to 2020. Our sales are maybe a quarter of what they were back then.
But this is while Kitco is putting out article after article. Well, not article after article, but a lot of information saying, "Oh, the retail investor is in. The gold, the ETF is, getting inflows. This is it. This is all the retail investors." No way, right?
No. Look, all last year there were outflows. All last year, and for most of this year there were outflows. And especially out of the gold, the GDX and GDXJ, most of the money, I would say that most of the money that came into the Bitcoin ETFs came out of gold ETFs and gold stock ETFs. That's where I think most of the money came from that went into Bitcoin in the investor world. So no, the retail investor is not in. He's not even close. I think the institutions have just started to move some of their bigger players into gold. But no, I don't know when retail is going to join this party. And believe me, I'm happy for that to happen because we'll sell a lot more gold at Shift Gold. But I'm happy for it not to happen because that means that my customers don't have to compete with everybody. I can still get my followers in at better prices when they're not competing with all their neighbors to buy, this scarce resource. But this is still early. People in crypto think they're early. I hear this all the time. Oh, this is still early days of Bitcoin. Bitcoin went from nothing to 126,000. People, look at all these crypto billionaires, right? It is not early when you have billionaires in crypto. Right? This is the waning days, right? This is when all the people that got in early, for years they've been cashing out.
Well, I've been listening to you. I've been listening to you since 2010. I've probably put 10,000 hours into your podcast. And the sad thing is, I try to talk to friends and family, and I try to tell them about this. And you know what my success rate is? maybe 1 in 500 listen to me.
Yeah, well, when gold is 10,000, or they might start listening to you. Oh
It's
yeah.
too late. Well, maybe not.
Well, it may not be too late. Gold. It's a moving target. Like when I was talking about $5,000 gold when it was at 1,000, right? And we never quite got there. Now we're almost there now, but so much has happened since then that I don't talk about $5,000. 5,000 is nothing. That's just around the corner. Then I'm looking at $20,000 gold or higher, because it all depends on how many dollars we've created. Gold is just telling you what dollars were. And we've created so many dollars over the last decade, and we're going to print so many more. We're going to print more dollars in the next decade than we did in the last. And so gold, this whole thing started. Gold was at $20 an ounce when we started the Federal Reserve. And in the 120 years before we had a Federal Reserve, gold stayed $20 an ounce. So it was this process of a fiat currency that we've gradually debased over time. Gold hasn't changed. It's the same ounce of gold. What's changed is how many dollars you need to buy it. You used to be able to buy an ounce of gold for $20. Now you need $4,000. Well, one day you'll need $20,000. One day you'll need $50,000. Just depends on how many days it's going to take.
I have a tech background, and I do know that Bitcoin is nothing, just like you say. And I just want to say to you, thank you, and I want to tell you that one day you will be a real billionaire with a liquid asset you can actually sell. Thank you, Peter.
Get there. It's going to take me longer than I thought. I'm 62 and I'm still not there.
Keep healthy. It's going to happen, and I want you to live at least another 30 years, please.
I'm trying my best to live long enough so that it's not just my kids that spend my money. Or my
Thank you so much, Peter. Bye.
But yeah, and I'll probably end up giving a lot of it back. Once the gold or my own stocks. But yeah, I think my business is going to be worth a lot more, and my reputation will have been vindicated beyond my following. Obviously the people who have followed me closely over the years, they know that I've been right. But a lot of people don't appreciate how much I've gotten right, because all they know is they hear, oh, Peter was against Bitcoin, and they see Bitcoin's way up there, and they just, you see, he got Bitcoin wrong. Or, they say, oh, he's been bearish on the stock market. Where, I haven't been bearish on the stock market. I've said the stock market is overvalued, which has been true. But I've said that, we're printing so much money that the price can keep going up. In fact, when I put up that video from, 10 years ago on CNBC, when they used to have me on, and they were making fun of me because I said, $5,000 gold, and it was at 1,200. They said, Peter, you're bearish on the stock market. I said, well, no, I'm not. I think it's going to go up. I just think it's going to go up less than gold, because I think it's inflation that's going to drive it up, not real fundamentals. And that's what happened. Anyway, I see Grant Cardone is in the house, so I made you a speaker too. You could chime in when you want.
Peter, I just want to know how I can get rich.
Huh?
I just want to know how to get rich. I want to know.
You're already rich.
Really, really rich. What would I do? What would you tell me? What advice would you give me?
To get richer than you are right now?
Yeah.
Well, do you have any gold mining stocks?
I don't.
You should buy some. I think you, I know you own some Bitcoin, so you probably made some money there.
Yeah, I own a bunch of real estate. I own 14,000 units.
Yeah, what part of the country are your units mainly?
They're all in Florida, mostly Florida, Texas.
Yeah. So those are probably better states, maybe landlord-friendly states that you can own property. I think the main problem, I think the main problem that real estate's going to have is not only that credit's going to get really tight and rates are going to go up, but I think that a lot of landlords are going to struggle to collect their rent. That's going to be part of the problem, because I think that the cost of living is going to go up a lot, and people are going to struggle to pay their rent because everything else is going to be so expensive. And they got to eat, They got to, they got to keep the lights on. They got to keep the utilities running. They got to pay their taxes. So, people might be behind in their rent. And I also think a lot of people may start renting out rooms, so they're taking in boarders, and kids will move in with their parents. Parents will move in with their kids. So households could be destroyed. So that could be a headwind for the U.S. real estate market. But I still think if you have a lot of debt on your property that you can manage, the debt gets inflated away. I mean, inflation is good for debt, right? Because it wipes out the debt. So that kind of leverage could help you. But I would just, instead of pairing Bitcoin, real estate with Bitcoin, I think you should have gold as a hedge to your real estate and these gold mining stocks. I think that would be a much better way to go.
So, okay, let's go back to the rent. People are not going to be able to pay their rent. Now, if we print more money, why would they not be able to pay their rent?
Well, if they get that money, yeah, right. I mean, we print enough money, they're going to pay the rent.
Yeah.
But if you're talking about hyperinflation, the rent's not going to buy you very much. So there's your other problem, right? You're getting a lot of rent, but at the end of the day, what if the cost of maintaining the properties exceeds the rent, right? Because prices just are skyrocketing. But yes, your debt gets wiped out, so that's a positive, right? If you have leverage,
Poetry for you. Like this video, subscribe to.
Right, but you can use your gold to pay your rent. So you can.
Yeah, but that's never. I mean, I've been in the rental business for 30 years. I've never had somebody offer me gold.
Well, but they can sell their gold to pay the rent, right? I mean, it's or at some point, I'm sure you would take gold. I'm sure if one of your tenants.
Look, if they can't pay in fiat, I'll take anything. I'll take
what?
Rental business for 30 years. I've never.
You might find that landlords not only want to get paid in gold, they may actually denominate their leases in gold. They may rent out the property. Say, look, I'll rent you this property, but here's how much I want you to pay me every month in gold.
Yeah, Peter, there's nobody taking gold for rent.
No, okay, well, if we get into a hyperinflation scenario, let's say we get into a scenario where prices are doubling every month, right? Are you going to rent out an apartment for, let's say, when the $2,000 at the end of the lease, could be worth a tenth of what it was when the lease began? So, follow me?
Yeah, no, I hear you. But
so once we really get into a higher inflation environment, then people have to come up with ways.
What do you call hyperinflation? What's hyperinflation?
Well, there's no specific definition of like how much, right? Because even 50% a month, I don't know if that's hyperinflation. That's damn high, right? Prices double every 2 months.
Oh, that would definitely be hyperinflation.
Yeah, so what about 10% a month? Where prices
10% a month would be hyperinflation.
Yeah, I don't know if that's not really hyperinflation.
That's 120% a year. That's never happened in my lifetime.
Well, not in America. It's happened in your lifetime in other countries.
Yeah,
it just hasn't happened in America. But it could happen in America. Maybe it will happen in America. And in an environment like that, landlords have to get creative. They just can't rent out a property, in a fixed dollar rent, because the dollar's not really fixed. And your expenses aren't. If you own a piece of property, your maintenance costs aren't fixed.
Yeah.
Right? And so...
But my top line would be growing faster than my expenses.
Not necessarily. Not if your rents were fixed in dollars and your expenses weren't, your insurance wasn't, your taxes weren't. What might be fixed is your debt. If you can lock in long-term financing and you can fix the cost of your debt, that's what you want to do. It's just that a lot of commercial loans are not like, residential, where you get a 30-year mortgage. A lot of the commercial loans, maybe are 5 years, and then you have to refinance it. And, who knows, what type of financing will be available when a lot of these commercial loans come due.
Yeah, but if you're saying that, like, okay, nobody's buying homes now, nobody's buying cars.
Well, I don't know if no one's buying them now, but yeah,
No, but if interest rates are skyrocketing.
Oh yeah, eventually.
There's no residential activity now. There's no volume at all.
Right.
In the secondary housing.
Yes, that's because prices are still too high. Real estate prices.
Well, no,
come down.
rates are too high because
No.
the moment the new home builders subsidize, there's no residential activity now. There's no volume at all.
Right. Yes, of course, but the rates are actually too low. Rates need to be higher in the U.S. Well, our rates are too low. So the real problem is that real estate prices are too high.
I love these conversations with you, by the way, man. They're always good to have with you.
But that's the solution, is lower real estate prices. Now, people who own real estate don't like that solution because it takes away the value of their assets. So what they want is low interest rates. But the only way we can get low interest rates is by creating massive inflation. But then that just wipes out, the lenders, and they don't want to lend even more than they did before. And so you end up with just the government. But we can't have a housing market where the government is supplying all the credit and doing it by creating inflation. I mean, then you have hyperinflation. That's going to be are so painful that nobody wants to allow them. So the problems just get bigger and bigger, which means the solutions become more and more painful, which is why we end up with hyperinflation, which is more painful than any of the solutions.
Also, everyone overlooks that real estate was the best investment from 1945 to perhaps 2000, but since 2000, it's been a dog.
Well, I mean, what's made real estate a good investment was the debt, was the mortgages that you were able to take out.
The lower interest rates, that's what made it a good investment.
Yeah. But a lot of real estate people forget. A lot of people buy something called a teardown. And a teardown is a house that used to have a lot of value, but now is worthless. So it's not like, houses don't go up in value. They depreciate because you use them. A lot of real estate people forget. A lot of people buy something called a teardown. This house in Connecticut, I spend so much money on that house every year. I mean, it is a massive money pit to maintain that house. Just the grounds, the gardening. I just had to redo the pool just to fix it. It's costing me more to fix the pool than it cost me to install
loss
it.
in my life has been my house, purchased in 2002.
The only real estate I've made money on is here in Puerto Rico, and that's because it's insane here. I don't know if Grant knows about what happened here, but maybe the real estate community has gone up like 7-8 fold since I bought. So that's kind of a crazy, situation having to do with supply and demand. But it just shows you that, if you own the right real estate, it can go way up. But I haven't sold my real estate, so who the hell knows? I'm just living in it. I just know that I could sell it for a lot more than I paid.
Use?
And concentrated wealth in places like New York City, and then all of a sudden the politics change, which looks very probable. What happened then?
Ironically, too, a lot of the reason that the real estate is so expensive in my community is because a lot of crypto people live here, and they bid it up with their crypto profits.
Probably a good move for them.
Well, at least they own real estate now. They own something real with the crypto they sold. Oh yeah. It was a great trade. That's why they didn't give a damn. They were coming over here and paying $40 million for a house that the guy who they bought it from, paid, $5 million. But, what did they care? It was funny money, right? They made it for nothing.
I sent you an email about a solution to all economic problems in about 2 seconds. That'll never happen, but maybe somebody read it, maybe they didn't, but it's too long to talk about here. See if you can find it. It's called the 2% solution. 2% tax on transactions, right? $550 trillion a year in the U.S. That would create enough tax revenue. Somebody read it, maybe they didn't.
Came up with some tax system with Grok. Forget that's all like.
Yeah, I did it with ChatGPT. That's funny.
Yeah, she used Grok.
But it ends up being a pure libertarian system, though, and it works, and it's very quick.
Yeah, look, I mean, the worst way to collect taxes is the way we do it, with income taxes and payroll taxes. It's the most economically destructive way for the government to raise revenue. The best way to raise revenue is through a consumption-based tax. That's the easiest to collect. It does the least harm to the economy. It doesn't create an army of lawyers and accountants that just suck off the economy.
They'll never give up their power. That's the problem in the conversion to the system. Because if they did, it would actually be good for everybody, including them. But they won't do it.
Yeah, because they like to be able to give out special tax breaks to people who bribe them. Basically, is what it boils down to.
Because with Grok, I asked a series of questions and ended up with a pure libertarian system, minarchist government, only funding the military, no entitlements, no nothing. I did include for the Democrats a $50,000 payment to everyone making less than $100,000, and all of that was financed with a 2% tax on transactions, the whole thing, plus paying down the debt. Wow.
Well, if you have to get rid of though the entitlements, obviously, when you hear guys like when Trump or people in the administration talk about how once upon a time America, the government only had tariffs, and we didn't only have tariffs, we had some other excise taxes, but yeah, tariffs were a major source of revenue, but that was when the government was tiny. We had the government just did the national defense, and we didn't have Social Security, we didn't have Medicare, we didn't have Obamacare, we didn't have all these government agencies and departments and programs that we now have to pay for. And the problem is we don't even pay for most of them now. We borrow the money. That is the problem. We have so much government we can't even afford to pay for it. So we've gone massively into debt, and we're printing all this money. This is how this whole house of cards is tumbling down. And this is what gold is telling you right now. We are approaching the end of this experiment, which didn't even need to be run because you pretty much know exactly how it's going. But gold is showing you right now that this thing is about to fall apart. But the people who have been living in this experiment world don't even realize it, right? Just like they didn't realize what it meant when the subprime market blew up in 2007. They didn't realize that there was a financial crisis around the corner. They have no idea. They don't realize that we're living in a bubble. They don't realize the phony nature of our economy. And so they don't get it. To them, it's a bunch of noise, right? Who cares what the price is? In fact, when I went on CNBC in 2004, I remember with Mark Haynes, who's not around anymore, and I posted this a few times on the internet. But I said, Mark, last time I was in your studio, gold was 400. Now it's like 450. It's gone up $50. And Mark Haynes was like, who cares? Why should I care about the price of gold? What difference does it make? I care about the price of coffee, care about the price of, corn or the price of milk. I don't give a damn about the price of gold. And he's the anchor on a financial station and doesn't even care about the price of gold, which is one of the most important prices in economics. The gold price means a lot.
Okay, this is Peter Schiff talking about gold. Gold has reached a new high today on October 13, 2025, 4,100 an ounce.
And it's going to create a very dangerous environment for a lot of people for a long time. And maybe moving to Puerto Rico is not smart in a tax sense, but a security sense. Because you may not be exposed to some of the dangers of starving masses and things like that. That's frightening.
Yeah, overall, I've done pretty well with the Puerto Rico move. The main problem was moving my bank here. That was a disaster. I lost not only tens of millions, it may be hundreds of millions.
Yeah, and your case seems so somebody to jump on that, really?
No, I know. It's all because all the criminals, some of the criminals are still working at the government.
The government's closed. They sent home half the IRS. Obviously, we don't need them.
As I said, the only problem with the government shutdown is they don't shut down enough, and then they always reopen it. Anyway, well, thanks a lot for the call.
Thank you.
Anybody else wants to say something, raise your hand. We got a lot of people who have requested to talk, but it's better if you raise your hand. That way I know that you'll know that you immediately want to speak, and I will enable you. Okay, there's a couple of speakers. You guys are up. I put two hand raisers. Yeah, is that Ration? Is that Camper? Campfire. See, it cuts off. You can never read the whole name. It just cuts it off.
I see that. I'm sorry to hear that.
Okay, this is Peter Schiff. It's October 13, 2025. Gold has reached 4,100 an ounce. Silver is past $52 an ounce.
Like 2x your video.
Yeah, fine.
So here's what I did. You you tell me if I'm a genius, if I'm an idiot, or somewhere in between. I've been stacking silver for about 15 years, give or take, and I thought, you know what? This is stupid. I don't have any extra money because I just kind of keep continually buying metals, one or the other, and I have a family of 5, or there's 7 of us in my family, 5 kids. And so I said, you know what, I'm going to do it. So about 3 months ago, I sold off about 1,000 ounces of silver at an average price of about $37, $38 an ounce, right when silver was about at 40. And I invested all of it into mining stocks. Now, since then, and I can sit and do the conversion rates and the maths in my head on what I'm going to pay on the capital gains taxes, depending on when I decide to pull money off the table, and then take the number of ounces I sold and say, here's how much I would have made on my 1,000 ounces. And I'm sitting about 40% up right now on that account. Now, it does drive me a little nuts because I sit and watch the government, the corporatism stocks, go up 70% today.
Relying like a crutch. We've been relying like a crutch on Donald Trump claims. How inflation is getting.
Metals, not MP materials. It was critical.
Oh, is that
Critical metals.
Is that what? Yeah, maybe the Trump administration took a stake in it, or they gave it a special.
Yeah.
Yeah, you gotta get the insider information. You gotta be.
Well, what do you think about the path I took there?
Okay, this is the Peter Schiff podcast. It's October 13, 2025. Gold has reached 4,100 an ounce. Hit that like button, subscribe.
Pays dividends. When you get your dividends, you can buy back some more physical silver with your dividends to start, recapturing your physical.
Okay, this is the Peter Schiff podcast. It's
if it doesn't pay dividends yet, wait. I mean, a lot of these stocks are going to be paying big cash dividends, and then you can use that to buy. But when I first started buying silver for my clients of my brokerage firm, it was under $5, right? Silver right now is $52.50. It's up again aftermarket, so it's up more than 10 times where it was when I started recommending it. $300 an ounce.
okay, this is the Peter Schiff podcast. It's
over 4,000. It's up more than 10-fold. And I took so much shit in the financial media for recommending gold and silver. Like, it was like sacrilegious. Like, I was like blasphemy. Like, how dare you tell people to waste their money on these rocks? It's like, But the most ridiculous thing is the same people that gave me shit on television for recommending gold and silver allow people to come on and recommend Bitcoin, and they don't say anything negative. They just, oh yeah, great, yeah, and they come out there and say, yeah, Bitcoin's going to $1 million, Bitcoin's going to 5 million, and they just, there's no pushback, no criticism. But when I was talking about gold and saying gold can go to 5,000, oh, that's crazy talk. That's not going to happen. You're just saying that because you're trying to scare people.
It's October 13, 2025. This is the Peter Schiff podcast. Gold is broke 4,100 an ounce.
I don't really plan on moving too much money around within. I don't want to pay the capital
This is
gains
Canada
tax.
John. Hit the like
For a
button.
year-long.
You're just saying
from the
that's why I
time.
moved to Puerto Rico. My capital gains tax is zero. So
Yeah, that's great. That's wonderful.
you can move here. There's nothing stopping you.
Except my 5 kids. That's a whole other story. But
The kids like it better. My kids have
that's true.
a life that I wish I had when I was their age. Forget about the money. Just the lifestyle, the community that they have. The kids have more fun. Well, the adults have a lot of fun living here too. It's like a Disneyland for adults. So everybody's having a good time. And on top of that, they don't have to pay capital gains tax.
If Trump starts investing in some of my companies,
well, there it is. Kansas is paid off.
so my long-term goal is to basically get back every one of my ounces, like you just said, and then hopefully the miners will outperform, the physical metals, even with my taxes. So tell me where I fall in the idiot to genius scale.
You're trying to scare people.
It's October.
Well, I don't know that you're certainly not an idiot. I don't know about genius, but I think it's a smart move I guess I was telling people to sell some of their physical to buy the mining stocks because I thought they were so super cheap. Right? And if that's all you had, obviously, like if somebody had $100,000 in physical, you're just saying that because $100,000 in T-bills, cash in some T-bills and buy some mining stocks. But if somebody was all in on physical gold, they had 100,000 in physical gold, they didn't have anything else. Well, all right, well, sell some of your gold and buy the mining stocks. Because I thought everybody should own them. Because
Okay, gold has reached 4,100, and we're listening to Peter Schiff. It's October 13th, 2025. This is Canada John. Hit the like button.
People before they doubled and tripled that they were going to 10x, and I still think they're going to do that.
Well, wonderful to talk to you. I'll let somebody else speak. Thank you so much for your time. I really appreciate it, Peter.
All right, anybody? I got a few people that can talk. You just got to unmute.
Yeah, hello, Peter. This is Mike French here from England. Can you speak?
Yeah, hey, Mike, how are you?
I'm great. Lovely to
So you're up late there in the UK.
Well, it's 10 past 11 at night. It's not too bad. And to speak to you is fantastic. It's a real honour. I would like to thank you from all the people over here in England that do follow you.
Gold has reached 4,100 an ounce. We're listening to Peter.
And specifically gold and silver. My question to you is: I've been listening to you for the last 5 or 6 years. I invested in gold and silver, stacking as much as I could. That was the only time I was able to do it. And I also bought plenty of mining stocks. I sat through a period of time for a couple of years, still listening to your podcast every week, where the mining stocks went down. My question to you is: yes, the mining stocks have gone up the last 18 months or so. However, they haven't gone up really as much as maybe you and other people suggested. I follow Ian Tucker as well. He was saying gold royalty companies and good mining stocks will go up 5 to 10x. When do you think they will be going up 5 to 10x?
I think they're in the process of doing that now. Before you can go up 10x, you got to go up 2x, right? So it's all happening. But, I have some stocks that were up really big today. Look, some of my biggest winners, Metalla, we have that on our fund. It was up over 10% today. That's royalty. That's in not only gold, but in copper. My silver stocks, let me see. I own Endeavor Silver. That was up 11% today. That was a big mover. Pan American is one of my biggest holdings. That was up 6% today.
Candidate Congressman John, we're listening to Peter Schiff. Gold has reached 4,100 an ounce. It's October 13, 2025. We're listening to Peter Schiff. Hit the like button.
But a lot of these big companies, some of the big royalty companies have been lagging recently, like Franco-Nevada.
Candidate Congressman.
Not weak. It just hasn't been going up that much. It was up 3.5%. Or Cisco was up, just under 3%. Even Wheaton Precious Metals, which is my biggest silver stock, was only up 3% today. Didn't even make a new 52-week high. So it's been underperforming. But, I've made a killing in that stock because I've owned it for 20 years, and my cost base is tiny. In fact, I was on Fox Business today with Liz Clayman talking about Agnico Eagle, which was up 4.7% today at $170. I have a stock under $10.
Candidate Congressman.
I remember the first time I bought it was under $10, and I still own those shares. I've never sold them, and now it's up 17x. But I still think I think it's going a lot higher from here. I wouldn't even consider selling it, even though I have zero capital gains tax. I can sell it pretty much and pay no taxes. But I think that we have so much room to go. In fact, even if you look at the GDXJ at 105, it was at 160 in 2011. 160. Gold didn't get any higher than 1900 back then. And I think, there was a lot more enthusiasm for these stocks back then. Investors burned so many times in the mining stocks that they're afraid to touch them. So it's going to take, I think, even more spectacular gains for the average investor to look at these stocks. But they're going to, because people invest in the rearview mirror. That's ultimately what moves people. They look and see what happened in the past. That's what got a lot of people into Bitcoin. They saw how much it already went up before they bought it. And then they started to buy it because they thought it would keep going up. Well, people are going to look at how much these stocks have gone up over the last 3 to 5 years, and they're going to want a piece of it. And they're going to
It's Candidate John. We're listening to Peter Schiff. Gold is at 4,100 an ounce. It's October 13, 2025. We're listening to Peter Schiff on his podcast.
I'm mostly heavily invested in. but I've also got other ETFs, Van Neck Gold Miners, etc.
John, we're listening to
yeah, and a lot of the like I am gold. We own I own a lot of that. We own it. That was up 7%. Goldfields today, a new 52-week high, up 6.5% on the day. Alamos Gold, I think. I don't know if it made a new high. No, not a new high, but up 5% on the day. What about Kinross? That might have made a new high. Let's see. No, up 5%, but not even a new 52-week high. But look at the lows. Kinross is at 25.5. The 52-week low is 8.99. Right? I am gold. The 52-week low is 13.5. But the silver stocks, the Star, Coeur d'Alene closed at 21. You could have bought it within the last 52 weeks at $4.5.
Wow.
So, this is just intra-year. But you can look at Coeur d'Alene and say, okay, yeah, it's up fourfold this year. But in 2006, it was like a $50 stock. So it still needs to double, and it won't even be back to where it was in 2006. So, these stocks are not expensive, even though they've gone up.
Yeah, I hear you completely. One other really quick question, if I may, Peter. I don't want to hog the air. With regards to the dollar is starting to crash. So is the English pound over here. What's your thinking around a gold-backed currency, and if it's even possible that would happen, and do you see it happening?
Well, it's not only possible, it's probable. It will happen. I mean, currency used to be backed by gold. That's what made it legitimate currency. So you can either have a fiat currency or you can have a legitimate currency. A fiat currency is backed by nothing, and a legitimate currency is backed by gold. And so all that it takes to go from a fiat currency to a real currency is to back it by gold. America, the U.S. dollar, used to be backed by gold. In fact, the dollar was defined as a weight of gold. The dollar was actually gold. And we issued currency that was backed by dollars, right? But what we ended up doing is just redefining the dollar, really, as just a piece of paper. Even though legally it's still a weight of gold or silver. But I think the world is going to go back. I mean, why was the pound sterling, right? I mean,
gold's at 4,100 an ounce. Peter Schiff is talking about U.S. dollar backed by gold. It's October 13th, 2025. Hit the like button, share button.
Is a new idea that just like that Bitcoin can be money.
Pound sterling, right? I mean,
Gold's at 40.
But yeah, no, I'm 100% certain that the world will be back on a gold standard.
I'm sorry, guys. Andy Shankman has said that the COMEX, or he's been following him at the COMEX, has been filling, and they don't know where, and a lot of it's in the U.S.
Filling what? What do you mean?
He said the COMEX contracts are being called, the physical gold's being delivered, and tons of it's in the U.S.
Easy, do you like both?
Taking it.
Both.
Could it
Yeah,
be
both
the
of
U.S.
these.
government? Are they going to
right? I mean,
Gold's at 40.
I doubt it's the U.S. government buying it, but there certainly could be some large holders that want to take physical delivery of gold.
Well, according to Andy, it's massive. It's massive. He's never seen it before in his career of 35 years or whatever. I mean, geez.
But we still don't see, like, at my gold company, at Schiff Gold, like, we still don't see big premiums in the physical market yet. I mean, it's not like we did during COVID. During COVID, like, the premiums really spiked. There was a lot, so the demand, I think, is more for the big bars. It's not the little guy buying coins. It's still the big guy.
Right, that's retail. So we're talking about a government probably buying this. I mean, who's taking the physical bar?
Well, it doesn't have to be the government. I mean, it could be. There's a lot of wealth in this country. There's a lot of people that have hundreds of millions or billions of dollars.
Maybe Elon Musk is buying it.
Maybe. I mean, he's a smart guy. I mean, anybody who's smart, who has a lot of money, is moving that money into gold. Because there's only so much art you can collect. There's only so much real estate. So when you have guys with significant quantities of money, you see, if we have hyperinflation, if you have billions of dollars, it's wiped out, right? It could be worthless. And so if you have billions of dollars now that may be worthless in a few years. You got to do something with it. You want to convert it into something to maintain the value of what you got now. You know, gold is one of the best ways to do that. Yeah. I mean, because if you're a billionaire in Zimbabwe, you don't have much any more money than somebody who's a hundredaire. Because it doesn't matter if you have $1 billion Zimbabwe dollars, right? Well, you know, if a pack of chewing gum is $10 billion, you know, what's the difference? You know, a couple sticks of gum.
However, the U.S., according to the gold clock, still has the most gold, if that's right. You know, that I don't know if that's
right. Well, of course, Fort Knox hasn't been audited in I don't know how many years, you know, 70, 80 years, when the last time we audited Fort Knox. So who the hell knows what's there? You know, Trump, they made a lot of noise about auditing Fort Knox. You'll notice that it hasn't actually happened.
just like dude.
So I think the reason they don't want to audit it is because they're afraid of the results.